Being somewhat aged with an increasingly unreliable and malfunctioning memory retrieval system, I may at times start to mumble. My writing staff is on strike, claiming grievances that were not settled in the recent writer's strike. Uh, those complaints apparently revolve around a lack of pay. I have noticed that Russian trolls and bots have recently increased their inane, factually inaccurate, invariably ridiculous comments to YouTube videos that accurately describe what is happening in Ukraine and the daily attacks by Russia that target Ukrainian civilians and civilian buildings, including apartments, schools, private homes, private businesses, and almost any imaginable civilian infrastructure or building. I think it's important for people when they look at these videos to recognize who is commenting and the purpose that they're attempting to achieve. What they are really doing is just confirming who they are and what they are. As to the bond and equity markets today, the increase in Middle East tensions, mostly resulting from Iran sending a warship into the Red Sea, apparently to protect the Houthis who are attacking cargo ships, is a potentially ominous development that could lead to an expansion of the conflict there. Gold is continuing to rally and has increased to over $2,000 an ounce, breaking that mark about a month or two ago. As to the bond and equity markets, the increase in Middle East tensions, mostly resulting from that conflict, in my opinion, in the Middle East, have been declining. As I discuss in my blog, I'm conservatively positioned in my portfolios. I have 5 brokerage accounts. I do not anticipate buying more corporate bonds or Tennessee municipal bonds unless interest rates shoot back up. I'm already loaded to the gills on those kind of securities. I have a serious reinvestment problem for bonds, CDs, and Treasury bills and notes that mature this year. I'm not under any pressure now to do much of anything with the flood of proceeds that I'm about to start receiving. As long as the money market yields remain at or above 5%. The best money market yield that I have is in the Vanguard money market fund that invests in treasuries that currently yields over 5.3%. I am not likely to add much to my common stock positions after the rally that occurred in the market starting in the fourth quarter particularly. I am finding fewer options for investment in the stock market, but I'm continuing to